Good morning to all traders and welcome to today's market insights video provided to you by Orbex. Stavros Tisios here with FX miners today. I want to talk about euro against the Swiss franc, the Canadian dollar against the Japanese yen, and also the dollar against the Mexican peso. Now, yesterday we've had some risk back into the markets due to the markets responding to the rescue package that was actually passed through Congress yesterday, and also investors weigh in fiscal stimulus plans, and that is also against the records initial jobless claims figures we've seen yesterday. The dollar was under pressure. Other risk assets though moved higher. That includes the stocks. As a result, some of the safe havens as well have seen the markets falling against a more risk on assets. Let's just say, for example, the euro against the Swiss franc, the Canadian dollar against the yen, and also we've seen emerging markets also supported because of this the shift in risk sentiment now. And the with the dollar Mexican peso particularly sliding like 10% over the past 3 days. I want to get started with euro and Swiss franc. We haven't talked about this for a while, so it's a good opportunity to talk about it right now because we've seen this move over here. We are near the end of this move pretty much, right? Now, some would suggest that we've ended this decline down to the 78.6 Fibonacci extension. It is likely, it is very possible. However, the current structure suggests that there is more downside to this because we've had an immediate wave 1 and 2 waves here, which means that in order to complete wave 3 with some guidelines respected, we're going to get to at least 104. This is the 100 Fibonacci extension of waves 1 and 2, right? However, don't forget that we also need to consider this Fibonacci extension over here, which is waves A and B, right? So we've done the 100 Fibonacci between A and B, which again, it's coming as opposed to the idea for a fresh lows. However, here's what I'm seeing anyway. I see this as wave 1, 2, wave 3 in the minor degree, and 4. And then I'm waiting for wave 5 to take out the 100 Fibonacci extension. That would be, of course, wave 3 in the intermediate degree. And then most likely we're going to get wave 4. I wouldn't say it will be sharp. It could be sharp. If it's sharp, it's going to be one move to the upside, very impulsive. If not, we're going to go for a triangle for wave 4 and then take out wave 5, just a slight peep below the wave 3 low that is going potentially to be hit, right? Now, don't forget that we've done the 61.8 Fibonacci retracement as well in the longer term, right? So if we see this moving higher, I wouldn't be surprised. If that is the case, that means that we have intermediate wave 1 here, then 2, right? Then 3, then 4, and this is a wave 5 that ended the ABC correction right at 1.05. At the end of the day, if you've heard the news, the Swiss are really doing very well in stocking food. So I have the supplies for 3 to 6 months. So if we take in mind that the dollar is weak now, euro is supported, which means that we're going to see euro moving higher against all the other relative pairs. And then once the situation starts becoming under control or deteriorating with coronavirus, we are going to see the Switzerland actually getting back on their feet much faster than the whole European Union. So that would indicate that we're going to see the Euro Swiss franc going down. Now, for the CAD yen, I mean, since we were down here, right, we were talking about this move to the upside and then this move to the downside, right? And this is exactly what's happened. Now, I see this as an A, B, and C, and wave C to me, I mean, it doesn't look, structurally speaking, as an ending triangle, but if you take the corrections into consideration, then it is moving. The price action suggests that it is an ending triangle. That suggests now we have ABC, 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 and ABC, right? So we've got this now either ending down at this level, okay, or this is only the first wave. Okay, so as long as we are below the 79.76, we can see further downsides, right? Now, in the shorter term, okay, and since we have had an impulse here, and this now prices are holding, if we stay above the 77.27, this is to be considered as a support level. So we should be looking for prices to move higher, closer to the 80 level, 79.70 or so, right? But we don't want to see this being penetrated for this move to the downside to continue, right? In case that happens, then this means that we've had ABC, we ended this move to the downside, and that is going to be a huge opportunity to the upside, and that's going to get us to fresh multi-year highs. Now the dollar against the Mexican peso, I mean, we were looking at this as a W, X, and Y, but if you remember, we're looking at the Y wave to cross below this one, right? Now, obviously, with this move happening, this is not likely to be the case. So we still got, well, at least, to be honest, it looks like the case is now what? This is the correction, okay? So we've had waves 1 over here. This is wave 2, right? 3, 4, and 5. We ended this wave at the 100 Fibonacci extension, right? So 24, 25 level or so, had a nice false break. And since then, what's happened? A huge decline over here, right? This is like 10% or so over the past 3 days. Now, what is really likely going to happen is we're going to get wave A ending at the 22 level or so, then most likely get a B, and then another move to the downside for wave C. And wave C could take us down to 20 or even down to the previous low, which is actually down here, wave 4, okay, and that would be the 17. So in the short term, I see more downside, medium term upside, and longer term downside again. Stay in, stay safe, and I will see you again next week.